Good morning, good afternoon. Welcome to this webinar offered by Financial Shalom of the Christian Reformed Church of North America. I'm Nate Raubiri. I'm the program manager for Financial Shalom. We are a program that is designed to help pastors and congregations achieve financial well-being personally and in ministry. I'm here today with Kim Miller from LSS Financial Counseling. LSS is one of our trusted partners. They offer debt management services, as well as individual financial counseling for individuals and for families. They are especially skilled at working with faith leaders, and we have a great partnership with LSS that they will meet with you as a CRC pastor or your family up to 6 times. You can take advantage of that by going to our website, crcna.org/financial shalom, and you can find out more information about working with LSS. I hope you'll take advantage of it. For today, though, Kim Miller of LSS is going to be offering this webinar on getting a financial health checkup. It's something that we all need at some point or another. And so Kim is going to walk through some of the components of that, how to identify healthy financial habits and to keep them over time. So I'm going to turn it over to her, maybe ask some questions at the end, but I hope many of you find this useful via the recording. All right, over to you, Kim.
Right. Thank you, Nate. Thank you, everyone. I'm glad to be here today to talk about how to get a financial health checkup. And so again, my name is Kim Miller, and I'm a certified financial counselor with LSS Financial Counseling. And we're very happy to be a partner with you all today. So, and then at the end of the presentation, I will give you our phone number so you know how to reach us if you'd like to set up an individual appointment. So, today, we're going to talk about getting a financial health checkup. It's always good to do at least once a year. And I'm going to be using an analogy compared to a regular medical checkup. So, the reason why we want to talk about overall financial health is because we always encourage at LSS a spirit of financial wellness. And so, if we were to be in a larger group, sometimes it's always better to have an in-person conversation. But if we were in a large group, I would like to ask, what are the words that come to mind when you think of financial health? And so today, as you watch this webinar and listen to some tips, always come back to what is financial health to me? So for us, what we like to think about having a financial well-being is part of the wheel that promotes overall wellness and wholeness. Similar to all the other areas, you can see spiritual, emotional, environmental, social, physical, intellectual. And so it is just one part of the wheel that allows us to move forward, to live our lives and the way that makes us feel, to move forward in the best manner. And so sometimes when one part of this wellness wheel is off, it can affect the others. And so our part today is we're going to focus just on the financial part, and so that it can help support the all other parts of the wheel as well. Because sometimes, we always say, money doesn't always necessarily equal happiness, but the way that we handle money sometimes can still provide us with some stability. And so we want to make sure that we're putting we're making the steps that can achieve that. But ultimately, we're all in this together. And so if you've been or if you've watched other webinars that I've hosted, we always like to refer back to this slide as far as the continuum of financial stability. And so sometimes some of us might find ourselves in survival mode, just basically just making sure that we have our main basics need. It might be paycheck to paycheck, and then we have struggling to stable, which you can see that sometimes you can go up and you can go down depending on where you're at. And then, eventually the goal is to try to get to a place of surplus so that all your daily needs are met, and then you're able to set aside money in savings and for future retirement. So we like to focus mainly on people, while we do offer within LSS programs to help people in the survival stage, the majority of our clients are in the struggling to stable area, where we do most of our work. We try to reduce stress, we try to encourage emergency savings, and we just try to encourage other things as far as continuing other financial goals. And so, as you're thinking about your own financial health, if you feel like you tend to go back and forth between the struggling and stable, you are not alone. the majority of us, um, cannot or struggle to come up with money in an emergency. And so there was a poll taken a couple years ago saying that 46% of us can't come up with $400 in emergency. And then if you raise that up to $1,000, then that number goes up to over 70%. And so it's things are hard sometimes, and so we always want to make sure that we're here for each other, and we can provide that support. So when you're thinking about overall financial health and you're not exactly sure where to start, to get where you want to be, you have to know where you are. And so let's just take your quote unquote vitals and let's get some lab work done. And so there's some things that you can do annually, and there's some things that might need to be quarterly, and then there's some things like I refer to like a tracker, like a tracker that tracks your daily steps. There are all other things that can track your daily spending, and to create a spending plan. And so just like when you go to your medical provider and you get lab work done, you're not going into that with a mindset of trying to find something wrong. What we're doing is we're going to get lab work done to kind of see where we're at. So I just want to encourage people that sometimes they're scared to do it because they don't want to find anything wrong, and you may not find anything wrong, and that's completely fine. We're just trying to see where you're at today. So, one thing that you can do is you can check your credit reports, and you can check your credit report for free from annualcreditreport.com. It is the only source for your free credit reports. There's other places that may offer it for free, but this is the government backed website where you can get your credit reports from all three credit bureaus: Equifax, Experian, and TransUnion. And usually, this website allows you to pull your credit report free once a year from each of the bureaus. Right now, because of the pandemic, you can actually pull your credit reports weekly through April 2022. So if you really wanted to pull it every so often, you can go ahead and do it now, but at least do it once a year just to kind of see, make sure everything is correct. You want to look at your names and addresses. You also want to look at all the accounts that are reported to make sure that everything looks good and that you recognize all of them. 1 in 5 reports tend to have some kind of mistake. It can range from really minor to really serious. And so it's always good just to make sure that everything looks good on your behalf. And if it doesn't, then you can go through the credit bureau's websites and dispute them. And that's something that as a financial counselor, we can do a credit report review with you. If you've pulled them and you're not exactly sure what you're looking at, we can help you walk you through that too. But the credit reports just show what you owe and how you've paid it. And so, which leads to the next thing as far as your health checkup is just to list all of your liabilities, which is who you owe and how much. And so, if you didn't really know how to find that, your credit report will show that. So you can write down, sometimes it may have, if you're a homeowner, list your mortgage, it can list student loans, it can list any other unsecured debt or auto loans or other things like that. So you can go ahead and list them all if you'd never put them in one spot to kind of see, what your debt load looks like. And then another step you can do is then to compare your overall investments and assets. And those are things that are growing in value over time. And so if you're a homeowner, it might be your home, and then other investments and that type of thing. It may be a collection. Sometimes it's not always cash based for your assets, but it could be antiques or other things. And so it might always be good just to review the value of that, because overall, once a year, it's always nice to take a snapshot of your net worth. And your net worth is your overall assets, so how much things are worth of value, minus the total amount that you owe, then equals your net worth. Consider it kind of like your cholesterol number. There's good cholesterol and there's bad cholesterol, and you have your overall number. And with cholesterol, while you want it to go lower, usually, with net worth, you want that to increase every year. So if you're looking at making a long-term financial decision and you're trying to figure out if that aligns with your overall goals, if your overall goals is to grow your assets and you're looking at trying to make a decision that might take on debt, you can ask yourself, is this going to align with my overall goal, in next year or 5 years or 10 or 15 years down the road? And so, and you can organize, and just, again, it's a snapshot. This is not an ongoing, you can watch it daily if you want, but it's going to drive you a little bit nuts because it's not going to change a whole lot. So a net worth snapshot is just, again, kind of an annual vital that you take to kind of see how things look like. Another thing that you always want to verify at least once a year is your Social Security benefits. And if you haven't done this already, we encourage everyone to create an online account with Social Security. Because we used to get paper statements in the mail, but now they've switched everything online. And a lot of times, unfortunately, in the days of scams and people stealing people's identity, it's actually you're better off creating your my Social Security account first before the scammers do. If you have your credit frozen through Equifax, you will need to temporarily unfreeze it in order to create an account, just so you're aware. They do use credit bureaus just to verify identities. And so that's why, if you're wondering, it has nothing to do with your credit, and yet credit bureaus are used to help protect, to make sure that people can create accounts of who they say they are. But on my Social Security online, you're able to look at your earning history, your future retirement benefits, any payouts if you were to become disabled, or if something were to happen to you, what your survivors might get. And so it again, every year it's a good planning tool to see what may happen in different scenarios. And also it can make sure that all your work history is being recorded properly, especially if you are working multiple jobs, or um, you just make sure everything looks correct. If something in your work history looks weird, or if you um, suspect that your social security number is being used fraudulently, then it's always, you can check it online. And if you see something that's not really right, then it gives you the time and or the prompting to call in directly to your local social security office and to dig a little deeper. But again, it's a nice, easy way to check everything once a year at least to see how things look. Also, good to do once a year is to review your insurance policies. It's always good to review them for cost, especially when they get renewed, to make sure that the value, the what you're paying is relevant to the value of insurance you're getting in return. And you also want to look at coverage, because a lot of times insurance companies will change what is covered. They might change the exceptions, they might tweak a little bit of deductibles, that type of thing. I, for the first time in a long time, reviewed my homeowner's policy, and then which is good to do, because we have a sump pump in our basement, and so our homeowner's policy covers the sump pump in a limited manner. That was extra coverage that we had to pay for, and it's always good as far as for emergency savings. I realized that that had a separate deductible, and so if, let's say, our sump pump broke and we had water backup in our basement, that we would have to pay our regular deductible plus the sump pump deductible on top of that. And so even though I knew in the back of my mind it was maybe something that was happening, it's always good to verify and get those numbers so that I have direct planning power with those numbers on paper. Same thing with your other policies. Is it covering the value of your asset that the insurance is covering? Does it cover belongings and liability? Your auto, if you have vehicles, if it's being covered with life insurance, will your any survivors in your family be okay if something happens to you? And then also, about disability insurance and waiting periods. Just always good is to review everything. Uh, Regarding what you would have to pay out of pocket first. Do you have that money in emergency savings? And is it covering what you need to cover? Especially with exceptions. Sometimes with policies, the first page that I always go to is what do they not cover, to make sure that I have that, mitigated as well. Along with insurance, it's always good to make sure that you have your beneficiaries up to date. And those are the people that will receive the money or the insurance policy if something were to happen to you. And that happens with your life insurance and also any savings and investments accounts. So you always want to make sure that they're up to date and they have the proper contact information. I don't know about you, but I've moved once or twice, and I realized that one of my older policies that I never really look at had my address from, or not, they had the correct address, but they had the wrong phone numbers. And so while they still would have been able to find us if something were a little bit more immediate, they haven't been able to call us this entire time. Other things to consider at this time when you're looking at beneficiaries is thinking about wills or healthcare directives or power of attorney. It all kind of goes hand in hand as far as for planning. Another thing that happens once a year may be looking at your overall employee benefits. And so I know that this varies between pastors and their situations. You may be getting benefits through your church, you may be getting benefits through your other employer. And so, or you may be getting benefits through another family member. And so every year it's always good to figure out when do changes happen. So for some people, it's calendar year, open enrollment, or any changes happen in October, November. But for example, in our family, my spouse, his stuff changes fiscal year. And so that's usually around May and June. And so it's always good to kind of get a heads up as far as when you might expect any changes. And then it's always good to review how will these changes impact you financially. And so uh, that's where we can't provide any specific advice regarding your own benefits with your specific employer, but we can help as far as budgeting and kind of determining what you might need to save and set aside. And then you can always talk with your HR or your benefits people to get more information. They usually give you a huge benefits guide to discuss that as well. One quick thing is if you are looking in your open enrollment or you have the opportunity to take a look at an HSA versus an FSA, I just wanted to go quickly between the two differences because sometimes these acronyms get thrown around and we're not exactly sure what they mean. And so the first one is HSA stands for a health savings account. And this is something that you have to qualify for with a specific health insurance. So if you have a high deductible health insurance, then you would qualify to set aside money pre-tax into a health savings account. And you can reimburse yourself with IRS qualified medical expenses, and there's maximum contributions that can change annually. But overall, HSA is considered a savings tool because the balance remaining in this HSA account then can roll over to the next year, and it continues to earn some kind of interest. And all qualified withdrawals are non-taxable. So it reduces your taxes because it's pre-tax, and then any money you take out then is also non-taxable. A flex spending account is an FSA, and that is a way, again, to continue to reduce your taxable income because all money put in there is pre-tax. And then you can use it for qualified medical expenses, or with some employers, they offer a specific dependent care flex spending account. Um, but this is just a spending account only. With your FSA, you cannot roll over that money year to year. So it really is a use it or lose it. So if you set aside $500 for a year in the FSA and you use all $500 of that, great. But if you only use 480, then that $20 is kind of lost. So you want to make sure that whatever you put money aside in the FSA, a lot of people do that because they know they will max out their deductible, or they have a specific amount of money they use for medical purposes, and they put that in the FSA. It's their own savings account that way, comes right out of their paycheck. And so that can be helpful that way, but you want to make sure that you use that money. And so that's just a quick overview of the two different accounts if you're ever curious. And again, you can always talk with your tax professional if you have one to determine if one or both of these accounts will be helpful. Usually if you qualify for one, you don't do the other, and vice versa. And so there's different rules that way too. So the last thing is that so you've reviewed your credit report, you reviewed your insurance policies, and then you go, okay, so how much of this stuff do I keep? Because I don't know about you, but I still have a lot of paperwork sometimes, and I don't know what should happen. So this is just a handy chart to kind of give you an idea as far as what you should keep less than a year or more, 7 years or more, or you keep forever. And this comes directly from Consumer Reports as far as what they recommend. And a lot of the stuff that you keep is mainly for tax purposes. And so, and a lot of this has gone paperless. And so we don't even think about this, but again, if you're old school like me, I had a lot of paper bins and file cabinets still full of paper, and so I'll have to go through and start shredding them because I have old bank deposits and receipts that I don't need to keep anymore. There may be old insurance policies you may not have kept. If they're no longer in um, you're no longer paying for them, or new policies have arrived, then you can get rid of the old ones. And then same things, for a year or more, you keep loan documents until the loan is actually paid off. Um, and then, or car and title maintenance until the car is sold, that type of thing. For 7 years or more, you really want to keep all tax records, or if you have capital gains or records of home improvements until the home is sold. Usually you might keep a home longer than 7 years. And then receipts and, all that stuff related to possibly an HSA or an FSA. You want to keep that along with your tax records. And the most important thing is to keep forever, you want to keep important legal documents like your birth and death certificates, marriage license, divorce decrees, your social security, all your estate planning, wills. But then the last one I just want to point out is if you have paid collection debts. Sometimes people say, well, keep it just 7 years. But unfortunately, with the way debt collectors sometimes buy and sell debts, if you had a collection that even if it's no longer on your credit report and you don't mind holding on to that proof of payment, just to reduce future headaches, it is always good just to keep all of your paid collection debts just in a separate folder, just in case you ever need to dispute them back off your credit report. So those are the things just to help you stay organized and to help hopefully minimize the paperwork that's floating around. Because you don't need to keep, bank and credit card statements, especially if they're available online that you can keep, and that can reduce future, identity theft and things getting stolen from your trash. So we've talked about getting the lab work and the vitals as far as on an annual basis. And so then, just like regular health, sometimes certain areas of your financial health might need more attention than just once a year. And so we're going to take a look at some steps you can take either monthly or weekly or sometimes even daily to build overall financial wellness. So you've gathered all of the stuff and you're like, great, Kim, now what do I do with it? So we like to apply it to the overall pyramid of financial wellness. And so this is the plan that we encourage people to take as far as to gain more stability in their finances. So the bottom two things with the pyramid is we encourage people to find ways to spend less than you earn and have at least $1,000 in savings. And then, then we work on paying off higher interest rates debts and the saving even more, paying off the lower interest rates debts, and then figuring out how you can continue to save for retirement for the future. So if you've taken all of that information from the credit report and you've listed all your debts, then you can kind of put them into categories as far as what's the higher interest rates debts and what are the lower ones to kind of figure out what should be your priority. But if you really want to focus on the first bottom to establish that pyramid, then the good first step on that one is to just list or review your expenses and your daily spending. So write down how much money is coming in and then figure out what is going out. So this is an example from a phone app that my coworker uses called You Need a Budget. And so this gives her an overall view as far as what she spent for a quarter, back in 2017. So, and you can see it has different categories. It has her monthly obligations. It has irregular expenses. Those are the things like gas and entertainment and food and that type of thing. And then there might be everyday expenses that she's listed. And so you can categorize. This is where the personal comes from, your personal finance is there's no right or wrong answer in creating categories, is just what makes sense to you. But we encourage anytime you start taking that first step in building financial wellness and try to create an ongoing monthly habit is to get it down on paper. And so we encourage people to make a plan and then choose your ongoing tracker. So just like you might use a Fitbit or a fitness watch just to track your steps daily. Tracking your spending can also do the same thing as far as helping you stay on track with your goals. So you create a budget and you create spending limits, and then these tracker tools can help you figure out how close you are to your spending limit for the month. Or you can even do it by paycheck. You can write down when you get paid and what bills come out of what paycheck, and then you just kind of plan. You can even break it down to each pay period, what that looks like if you don't want to start on a monthly basis. It's really about finding what works for you and sharing those strategies with others. And so here are just some examples. You can do good old fashioned pen and paper too. You can do these phone apps, on budgeting apps on your phone. Some are free and some are not. Some you hook up to your bank accounts and some you put in all the information up front. It's again, whatever works. Personally, I use pen and paper, but I tend to be old school and I just don't bother hooking things up. But and I track it that way. So but again, like I said, my fellow educator, she uses You Need a Budget, and she said it completely changed the way that she viewed her finances, and it kind of helps encourage her in different ways. So getting things down on paper is one way that you can build monthly habits, and it doesn't have to be perfect right away. Just like getting any kind of habit going, you just sometimes you just need a little bit motivation. So we always encourage to set goals because the budgets help you be in control of your money, and then but you're more likely to reach your goals if you write them down. And so along with a written spending plan, to maybe set a goal that is, and we always encourage SMART goals: the specific, measurable, achievable, realistic, and timely. So a lot of times when we meet with clients, they always say, well, I like to save more. And then through the process, we try to find a specific way to make it more smart. And so if you have a goal in mind that, let's say, I want to save more, then we try to figure out, okay, what do you want to save it for and how much? So in this example, this person wants to build $1,000 emergency savings in 1 year. So they calculated that they would need to set aside money from their direct deposit from each paycheck into their savings account. That is a specific goal. And it's measurable because they know they will reach the goal when they have $1,000 in savings. They feel like it's achievable because they have income with direct deposit and they have a savings account. And then the only thing that is kind of up in the air yet is if it's realistic and if it's timely. And just even if you make a SMART goal, you can always adjust this to accommodate for other emergencies, for example. But if you need to change the time frame, it's not a matter of, oh gosh, I'm not hitting my goal. It's just you're adjusting it so that you can continue to stay motivated. So that is one example of how you can turn just an overall wish into a specific thing. So it might be, you know um, I want to make sure that I have enough money, you know set aside in my FSA, for my annual medical expenses. And so it might need to start out by saying, well, how much do I actually spend, which then goes back to figuring out, what am I actually spending? And so again, it comes back to the tracker, and that type of thing. So a lot of it can be, going on at the same time, as far as, how your goals relate to that. So I just wanted to end with, we've gone through a lot of information in a short amount of time. And, usually we try to take some breaks to answer some questions or to, share ideas with one another. Because I think um, I just want to make sure and to encourage you all that, you aren't alone in this, that small changes can make a big difference. And, sometimes it's a matter of just saying up, automate your savings, treat it like a bill, or set up your bill pay so that it comes automatically. And then sometimes it's a matter of just being honest with yourself, is figuring out, what are you good at? What do you struggle with? And, what steps can you take? Oh, in this version of my presentation, I don't have my little motivational song, um, but it is, I can always send it to Nate with the handouts if people ask for it. But it's just, it's the song that Diana Ross sings from the movie The Wiz. It's called Believe in Yourself. And it's just, it's a nice affirmation in that you just start doing it, and you just take the small steps. And if you can believe in yourself, and you're hoping that you can set aside a little bit of money here and there, and that you can find some changes to increase your overall financial wellness. And we're here for you. We have this partnership with our financial choice program that you get 6 free one-on-one sessions for you and your immediate family. We have financial counselor on call. So if you just have a quick question, just know that we are a trusted partner that you can call and ask us a question real quickly, or you can set up a full appointment. And so this is a number that you would call, the 800-528-2926. We offer online counseling, that's email only, but then we also offer video or phone counseling sessions as well. And so we would love to talk with you and answer any questions you might have. These are the areas that we provide, budget counseling and credit reviews. We can do pre-purchase, or if you are a current homeowner, talking about your current situation. We also talk about people creating strategies for their student loan repayment, and then we also help create debt management strategies, either on their own or through various tools that might be available to them. So again, thank you very much for this overview. I hope you have find some information, and I encourage everyone to figure out, what are maybe one or two steps that you can take today to check in on your overall financial health. And if you just would like that first step of creating a written budget, and that's something that we can help work with you on that to get that created. So I turn it back over to Nate to see if he has any questions to
Yeah, thanks, Kim. That
clarify.
was great and very comprehensive. I kept wondering certain questions, and sure enough, you answered them in the course of your presentation. So thank you.
Oh, thank
I
you.
did come up with a few more. One, I just wanted to say to everybody watching, if you latched on to Kim's very good metaphor here about getting a checkup. I was wondering, well, how do you find a primary care physician? And I
Oh
was
yeah.
I was glad that uh, Kim reminded you of LSS Financial Counseling Services. They are a great place to start for setting up a budget, and as well as this presentation, keeping this as a reference can be a really helpful way
Hmm.
to know how to do a checkup for yourself. I also just really appreciated Kim, the encouragement to take a few steps that you can take. I know
Hmm.
it can be a little bit daunting uh, it, when you try to organize and manage all of your finances, especially if some of these things you've left go for a while.
Hmm.
So I appreciate that encouragement to take one or two steps and to automate when you can, and to ask yourself if you're being honest with yourself about things. So I think that you've very helpfully named some ways to overcome some mental barriers
Hmm.
to getting a checkup. Um, I do have just two questions. You
Sure.
laid out some really helpful tools, online tools, kind of for organizing your budget, et cetera. Do you have any tips for just organizing kind of all of your kind of uh, financial affairs? Is it kind of a thing of whatever works for you versus of paper versus online? Do you have anything to point people to for, okay, here's a good way that you can store and track a lot of these things?
Yes, that is a good point. So going back to that chart here, here I'll go back to this one. So part of it for me personally is I like to keep stuff. I have a drawer. I call it the drawer of sadness. I shove a lot of things in there. And then every so often I look through that drawer of sadness, and it kind of weeds itself out because I've waited long enough that I don't need it anymore. And so um, part of it is just telling yourself it's okay to let go of certain things. Like we keep paid, healthcare bills, or we keep state bank statements that we come in the mail. Like, and there's like one or two credit cards that I haven't turned paperless statements on. I just haven't gotten around to it. And so part of it is, what do you feel comfortable with being paperless? If you are very technology forward and you're comfortable keeping your passwords and your logins, and you can go online confidently and get all that documentation, then a lot of this paper stuff no longer exists. And so then it's a matter of keeping all of those, like the second two columns, like your tax stuff and all the important licenses, probably in a special folder. We have a filing cabinet, in a non-disclosed area in our house. You just can't come and find it, Nate. But so that hidden in a special place, so that we know that we kind of have an internal reminder that if anything important we need to check one or two places. So I think that might just be a good place to start. Is, do you have one or two really places that your brain always goes to, and then just slowly shifting all of that stuff there. I know some people do safety deposit boxes too, if you wanted to have that expense. um, or just a fireproof safe or a lockbox, that type of thing. Just be aware that fireproof safes are protected for paper, but they do not protect like thumb drives or computer stuff, because they'll melt at a much lower rate of temperature, just so you're aware. So that's my IT person in me always goes, like people shove everything in the fireproof safe, but not everything is paper safe that way. But so I have just slowly, as I do these webinars, is my tax returns end up being all my important things for the year that I like to keep. And I just kind of keep it all with my tax return, and I put it in that safe space, and I go from there. So, but the stuff that I can keep paperless is the stuff that then I just learned to say, okay, it's paid, it's documented, I can look online and verify it. And then I just have to remind myself, I can get rid of this piece of paper. then I shred it. Is that what you were looking for? Is
That's
just
really
different
helpful.
ways?
Yeah, it sounds
Yeah.
like you are definitely in kind of a, keep it physically in a space, which
Yes.
is very very valuable. And I like what you said about having a drawer of sadness. You just know it's going in there, and then you can schedule or do a regular time that you're like, okay, time to go through
Right.
the drawer of sadness and just
Right.
and deal with it.
And you
Um,
can give it a much cheerier name than I did. I mean, it can maybe just be like the drawer of mysterious items. You can make it a little more exciting to go through. But
right.
I've
There
just
you go.
labeled it mine.
There you go. Well, as well as I like how you combine that with, well, automate the things you can,
Yep.
so that they just are not even, occupying kind of your mental space there.
Right,
Um,
because we get a lot of paper, and I've actually, just opted out of all the pre-mark. You can go to, and this is a separate webinar we talk about, but optoutprescreen.com, reduces a lot of the general marketing stuff that we get. And so the overall less paper that comes into my house, the happier I generally keep, or I stay, because then I don't have to keep on monitoring all of that information either. It's like, oh, this is just a, bulk mail item. It's not really my home warranty. It's just a, you know, mass marketer trying to get me to get their product.
mhm.
So the stuff, all of that, the more you can reduce that paper coming in, the better off. Um,
Yeah, yep. Clutter doesn't necessarily lead you to financial health or well-being.
right. Yeah. That certainly doesn't make me feel well. That's
Nope, nope. Certainly not. I guess one other question I have is there anything specific you'd have to say for pastors or congregants whose cash flow is a little more uneven or harder to plan?
sure.
You know, are,
Yep.
I would imagine a lot of these really kind of cyclical checkup things apply and are maybe even more important, but
Yep.
some of them vary if you don't, if your paychecks don't all look the same.
Yes. And this is always the hardest, and there's no real easy answer, especially if income can fluctuate. But to help reduce and again, with finances, our emotions, again, going back to the overall well-being wheel, is that it can be really tied to our other senses of well-being. And so I always encourage people, if they're experiencing fluctuations in income, the more data they can gather, to help take the emotions out of their finances, the better. Because then, especially if it's like with couples, or especially with pastors having to go back to their congregation and describe, their overall situation, then you can always refer back to the data. You can say, like, for this month, this is what this looks like, as opposed to, I think we don't have enough money. It's taking the I or you, or taking that even the feeling, whatever feeling it is, shame or judgment or sadness or happiness, whatever, it just takes that out, and then it can go back to the numbers, as far as, this is what the numbers are saying, this is where we need to be. Are there ways that we can temporarily reduce something? So sometimes, especially if things are fluctuating, it's always good to kind of figure out what are our very priority obligations that we need to make, and are there any things that we can temporarily cut out? And I think the word temporarily is always important, because our brains don't always necessarily want to make those long-term changes, but if we can just tell ourselves, this is just for the next 3 months, it tends to be a little bit easier step forward. And then, especially in the with the income, then knowing that this is the level base of expenses that we need to cover, then it kind of gives a better idea as far as, okay, how much income is coming in? Is there extra that I can set aside when the month is higher? That type of thing. So again, getting down on paper, the data is just the best you can.
That's really helpful, Kim, and wise. Yeah, thank you for that. I
Mhm.
don't think I have other questions. You answered all of them really well in the webinar itself. Um, I just want to encourage any of you watching again that if you are feeling stuck on finances, this all sounds really good. You'd like to do a financial health checkup and you'd like to begin that as a regular practice. You'd feel better for it, but you're just kind of stuck or having trouble getting started. Book a meeting with LSS Financial Counseling. That could be a good way to just kickstart some new habits, just to build some inertia. LSS Financial Counseling, they are skilled at working with pastors. They have a partnership with us in the CRCNA, and they know the Financial Shalom program. So we would be delighted for you to avail yourself of their services. Again, you can find information via the info that you can book an appointment via what Kim shared, as well as going to the Financial Shalom website, which is crcna.org/financial shalom. So Kim, thank you very much again
Thank you.
for this presentation. It's really valuable stuff, and I hope many people are served and their financial well-being is furthered by what you shared.
All right. Thanks, Nate.
All right, have a good day. Thanks everyone for joining and watching along.